Hello and good morning, everybody. You're with Martin Panev, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with the North American markets, nothing interesting on the main indices. Yesterday, down and NASDAQ went pretty much sideways. The Dixie Dollar Index is down to 94.60 from almost 95. Again, initial jobless claims yesterday, 11,000 weaker than the expectations. Chicago Purchasing Managers Index, 3.6 better than the expectations. GDP in Canada, severely better than the expectations and the previous. The traders will mainly be focused on today's events as the US dollar was weakly traded yesterday. Today's events could be the only good sign for the US dollar after Ms. Yellen's comments, rather dovish comments, earlier in the week. Today in the agenda, non-farm payrolls, unemployment rate, ISM Manufacturing PMI, ISM prices paid, of course, both reports for the month of March, average weekly hours for March, labor force participation rate also for the month of March. We also have the Markit Economics printing out the Manufacturing PMI for March, construction spending month on month for the month of February, and the Royal Bank of Canada Manufacturing PMI for the month of March. Moving to the European markets, the German DAX 30, 100 points down yesterday, French CAC 40, 60 down. From the agenda, German retail sales month on month, minus 0.4 versus 4 expected and minus 0.1 previous. German unemployment change 0 versus minus 6,000 expected and minus 9 previous. Eurozone flash HICP reports came out pretty much as expected. Also, the inflation reports came out with no surprises, the CPI data. Today, we start with Swiss retail sales reports, and then all through the day, Markit Economics will start printing out the manufacturing PMI reports from all over the European Union, including Spain, Italy, France, Germany, and Greece, and of course, the European area in general. We are to also closely look out for the unemployment rates in the European Union. UK markets, yesterday FTSE 100 gained 45 points and closed at 61.40. The 10-year gilt yields closed at 1.40% yesterday. The GDP, that was the main event yesterday, quarter on quarter, 0.1% better than the expectations at 0.6, and year on year, 0.2 better than the expectations at 2.1. Consumer credit, worse than the expectations. Mortgage approvals were better than the expectations. So yesterday, pretty mixed data, but rather on the positive. Britain's current account widened more than the economic forecast. This, however, was parried by the better than the expected on GDP. The sterling depreciated against 15 out of its 16 major rivals. The poor current account can be largely attributed to the slump in commodity prices. Despite the mixed economic data, the main drive behind sterling's performance remains the Brexit referendum. In terms of currency pairs, the cable 10 pips down yesterday, over 100 range, versus the yen 12 pips up yesterday, again over 100 pips range, versus the Aussie 35 pips down yesterday, 150 pips range, going sideways as we speak, versus the Loonie 10 pips up yesterday, 220 pips range, and versus the Kiwi also 70 pips down yesterday, almost 200 pips range, going sideways, versus the Swissy 65 pips range yesterday, down yesterday, 135 pips range. Today, Markit Manufacturing is going to show us the PMI reports. In the UK, nationwide housing prices year on year and month on month would be the main reports for the UK today. Asian Pacific market, the Nikkei 225, 360 points down yesterday, 590 down already today, and continues to slide. Now, yesterday we were looking for the Tankan manufacturing reports. All of them, pretty much all of them, came out weaker than the expectations and weaker than previous. The non-manufacturing, the manufacturing reports, all of them came out pretty bad. Large all industry capex, 11.1% weaker than previous as well, and weaker than the expectations. The GPY 10-can non-manufacturing index for the first quarter, 3 points weaker than the previous and 2 points weaker than the expectations. In China, non-manufacturing PMI better than the expectations quite severely, and also the NBS manufacturing better than the expectations. We also saw the manufacturing PMI came out better than previous, better than the expectations. Nikkei manufacturing PMI as previous, and vehicle sales, one positive thing for Japan's economy yesterday. Basically, investors are starting to worry. The Abenomics is losing momentum. The worry in Japan is that the Prime Minister, Mr. Abe's plan to boost economic growth is losing momentum, as highlighted by the Bank of Japan's quarterly Tenkan survey, which was already released, and it's showing a sharp drop in business confidence during the first quarter. Stocks in Japan fell sharply yesterday, worried that the strength in the Japanese yen would weigh on corporate earnings. The rest of the Asia Mall shares were off, even as gauges from Chinese factory output showed pickup in March. Two major movers yesterday on the yen versus the euro, 66 points yesterday, 125 range, and 60 points versus the Swiss franc. Next week, we have the Xinjiang Festival. The banks are closed in China. On Wednesday, we have the Caixin China Services PMI reports, and also leading economic index, coincident index, and foreign bond and foreign investment in Japan stocks for Japan. On Friday, we're going to look for the EcoWatcher surveys and the current accounts. On the Pacific front, yesterday we saw a decline in the sales in the property markets in Australia. However, the private loan sector is with slight increase. The manufacturing sector came out 5% higher than the previous report, and the commodities export price changes released by the Reserve Bank of Australia came out with 6% better than the previous report. The recent reports are evidently showing straightening Aussie, which showed over 100 pips ranges versus the major rivals yesterday. However, finished pretty much the trading day near the opening quote. Business confidence and the money supplies in New Zealand showed some decline yesterday. On the commodities front, the S&P 500 yesterday declined severely, about 100 points yesterday. Oil did $1.60 range, ended at 38.20 per barrel. It is under pressure over the Asian session, and the price is declining even with another 40 cents. 37.90 is the current price on our platform. Gold prices ranged over $17, ended positive. Big ranges on the natural gas trend yesterday, with signs of price under pressure over the entire trading yesterday and over the Asian session already. That was pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Watch out, and we'll see you again next week. Cheers. Bye-bye.